Traders, today we're going to talk about the risk management by technical methods. I mean, how to manage a risk in the financial market by using technical methods. This video is provided by ProSkills, the analysis department of the Hello traders. Today we're going to talk about the risk management by using of technical methods. This video provided by Trade Pro Skills Analysis Department of Zero Spread, and there is our contact page. You can contact us anytime for any question. Risk management. What we're going to learn today. First of all, we're going to understand and identify what's the risk management, and then most common traits and problems and the mistakes that the traders can face, and different ways to manage that. As well as we're going to learn which technical indicators are useful for risk management and how to use them. Let's get started. What is risk management? Risk management in a financial market is identify, assessing, and controlling all kind of the trades you may can damage your capital or reduce your potential income. Managing the risk is not just about how to control your loss and save your capital. It's also about how to manage your potential profits, which you can have out of the market and can decrease or increase it. So the risk management, in the risk management there is two factors are very important. There are two factors are very important: psychological and technical methods. In this webinar, we're going to learn by technical methods mostly, and we will focus on the technical side, how technical we can manage it, and which technical indicators can be helpful for us. To eliminate trades, they must be found first. First step of solving any kind of the trades or the problems is to know potential threats and find them. If you want to solve something, first of all you need to find it. If you want to solve some problem, first of all you need to find it. To find the problem, you need to know them. You need to know what kind of the problems you can face, and search to follow the problems, search to find the problems, and find a way how to solve it. So there is the most common problems or threats that you can face in a financial market is the wrong entry time, wrong lot size, high leverage, and wrong exit time. As I told before, risk management is not just about how to manage your lose. How to manage your positions to have less lose. It's also about how to manage your profits. To get the most profits of the market. First law: trend is your friend. Never trade against a trend. That's the most common mistake of the losers. That's what is usually the traders do is that they go against of the trend. For example, if they want, that's how to understand a trend, right? You can use the moving average, simple moving average like SMA, or you can use MACD, moving average, converged diverse, and you can understand that is the trend is up or down. If it's the downtrend, never go for buy. Downtrend is the time to sell. Uptrend is time to buy. And when it's the right movement, it's the best time for scalping. Remember this and follow the rule. That's a simple rule, especially if you're a beginner. So that's habits of the the problems of the habits of the losers is that when it's going down and they have, for example, they have a buy here, didn't close here, and started falling down, and they are telling, oh, it will reverse now, it will reverse now, it will reverse now, and it comes to the point that they're going to lose their accounts before the prices start reversing, before the price start coming back. So that's what is important, is the following the trend. First of all, to find the trend. How you can find the trend? You can use the simple moving average, you can use MACD. There is a link of that in your PDF file, and if you're watching the video, you can go to our website, and we have videos about the simple moving average, and about the MACD, how you can use them and how totally it's useful. We're gonna try them on MetaTrader and the live chart. First, let's to see most information by written information, and then we're gonna go to the live chart to see how they work. So the other problem is the wrong lot size. I mean, so many people, they are entering in a market with very interesting lot size. They think that it's a gambling. We do not gamble here. Another common mistake, as I tell them every time, especially between new traders, is to choose the wrong lot size for the positions. Remember, you cannot be a millionaire in a night. This business, as all other kind of the businesses, can make you rich, but not in one day or one night. If you're looking to get rich in one day, make sure you're in a casino. Actually, if it helps. Trading is a business, it's a science, and it works perfect if you are in the right way. Markets always have a down and an up movements. So make sure your lot size can keep your position alive until you get to the right point to close it. If your lot size is not normal, it's not standard, if you don't have a standard lot size, the market in the up move, moving up or down, it can close your position even before you're getting to your stop loss. So there is some example. If, for example, you have the leverage of 100, we're going to talk about the leverage. And you have a capital of, for example, 500 for the currency, gold and silver. There's a lot size 0.05. Micro lot, you're gonna have it. For oil maximum lot size is a 1, as well as for 1,000, 5,000, so on. I mean, you can use this method, especially if you're a beginner. Just use this method and follow the rule. Don't go more than this to stay in a safe side. You know what I mean? Just like to make sure that your account going to be alive, you're going to have your accounts, and you are not going to lose your account in the very first day that you started your trading. So another problem is to select the very wrong leverage size. First of all, what's the leverage? The word of the leverage just comes from the lever. The word of the lever, yeah, that's the lever. If you want to move something which is so heavy and you don't have enough power to do, you're gonna usually use the lever, right? It's the same, exactly, almost, I can say that it's the same in the financial market. This leverage is the kind of credit that the traders, brokerage companies, they're gonna give you. I mean, it's not the money comes to your account, but it's opportunity to multiple your lots, the loss or your profits. I mean, by moving, if for example your leverage is a 1 by 1, it means that if a market moves $1, your profits or your lose also will change $1. And if it's the, it's in $1 size, so it's depend on your lot size. So if it's a 100, your position, if in your position or in your actually in your accounts, trading account, if you have the leverage of 100, it means that with changing of $1 in the symbol, any symbol, no matter, you're trading in, your profits or as well as your loss will gonna change 100 times more based on your lot size. So the leverage is very good if you know how to use it, and it's gonna be so dangerous if you don't know what's that and how to use it. If you're a beginner, try to use the leverage of 130 or maximum 150. Intermediate 100, expert 200, and if you're a professional trader, you can use 200 up to 400. Still, there are the companies that they offer you the leverage of 500, 1,000, even up to 1,000. I mean, it's depend on how professional you are. It's depend on your experience on the market and which symbol are you trading in and what's your capital. Based on that, you can select your lot size. Based on that, you can select your leverage. Make sure before selecting anything, before any setting, check everything. I mean, check your setting to know what's your leverage and how to use it. This is very important. And stop loss and take profits. Stop kills everything. Why I'm saying that? So many people, they do not use the stop loss, and they say, oh, you know, the price will get back to the same position, same level that it started. If they're, you know, for example, the loss. For example, if they are minus 100 and their capital is 500, and it's so close to, I mean, it's so close to lose the position, to lose the their account, but still they're, oh no, you know, just I'm pretty sure it's gonna reverse in next level. It's gonna reverse now. It's gonna reverse now, and they're waiting. They're waiting for nothing. And after 5 minutes, 10 minutes, or after a few hours, they see the number of the zero in front of their capital, in front of the margin. Don't do that. Never enter the market without stop loss or take profit. Both of them are important. As much as the stop loss is important, the take profit also is important. I mean, it's not just about the stop loss. I told you before, the risk management is not just about to control your losses. The risk management also is about to control your profits. To exit in the market, exit from the market in the right time when you have the good enough profits. So there is two ways to understand, to clarify, to identify the stop loss and take profit levels. I can tell you two ways for now. I mean, there's so many different ways, but most popular ways, that's the most popular method, is first of all to find the support and resistance levels plus important points. I mean, not just the support and resistance levels. The resistance levels and the support levels are very important. However, what's important as well is this important levels. They are so matter. They are so matter in your trade. You need to know in which levels usually the price changed, or which levels the price were thinking. Right? For example, this level. I didn't mention that. You can go to find it. Go to the 1 hour chart, 4 hour chart, and 30 minutes time frame. In your chart, go to the 30 minutes, 1 hour, and 4 hours. And then find these levels. You can see this level is a Euro USD, right? And this level, it was always important. You see here, 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 here. Always the price was thinking in this level to go up or down and what to do. As well as this level, this level, this level. Find out very important levels. And when you want to enter in the market, make sure that you're going to use these levels. If you want to, for example, to sell, you entered here, make sure that maximum is going to be your stop loss. Or if you entered here, it's going to be your stop loss. If you entered here, it's going to, this one or this level can be your stop loss. You know, to find out your stop loss, there's so many people, they say, how can I find my stop loss? Or how can I find my take profits? If you, for example, sold here and you want to know where is your take profits, this level can be your take profits. Or this level can be your take profits. You know, what is important is to finding out the stop loss and finding out the take profits level and important levels. We're gonna go to the live chart and see exactly how they are. And the second way is to use trailing stop. Trailing stop is very important option that you have in your trade, in your MetaTrader. Unfortunately, it's not available on a mobile application, but if you're trading with your desktop or your laptop, so you can have it. So easy. I will show you how to use it. And what is important in stop loss, in trailing stop, is to find the trailing stop points. To find it is the best way to use if you're a beginner, if you don't have enough experience to find out that. So what you can use parabolic SAR, and the last, for example, if you are selling here, the last, you know, parabolic stop SAR means parabolic stop and reverse, where the parabolic stopped and reversed again, changed the direction or started new movements. So here you're gonna change, right? You know, the parabolic is coming down, stopped and changed the direction down a little bit up and then again down. So this parabolic stop, the parabolic SAR shows you that. So if you want to enter, so you see that here the trend is down, so you have to find the best time to sell. It can be one of the best times to sell. So if you are selling here, then what to do? What should be your trailing stop points? Your trailing stop points can be the difference between the peeps or the points between the last two line of your parabolic SAR here. How to find them? Let's go to the live chart. We are having here Euro USD, right? So first I told you what to do is to find your trend, right? How you can find your trend? Go your navigation and moving average. Bring a moving average. Standard 14 days simple moving average based on the close. Standard setting. No need to change anything. As long as the candles they are under moving average line, it means that you are in downtrend. And when the candles above, it means that you are in an uptrend. If you go back, for example, here you can see the candles they are above of moving average line, so we are in an uptrend. Here the candles and there's like kind of the candles they're between. I mean the moving average is a between of moving between of the candles, so you are in a side movement. Side movement can be one of the best times for scalpers. You can scalp there or here. That's the best time for scalping. If it's in this situation, so you are in an uptrend. Here you are in a downtrend. With the moving average, you are in an uptrend. You are in a downtrend. You can see that. With the moving average, you can understand when you have to enter to the market as what. For example, if it's an uptrend, just enter to the market just with the buy. Never go for sell. Never go for short. If it's a downtrend, never go for long. Always just a sell. If it's the side movements, just try to make scalping. Down, up, down, up. The market always have a down and uptrend and a downtrend. So never mind. Just you can have this trend always, and there is always opportunity either to buy, either to sell, or start scalping. So that's how you can find your trend to understand. Don't go against of the trend. Always try to be a friend with your trend. So when you understand what's the trend, it means that you are, for example, here you're in a sell position, right? You have to go for a sell position. Now let's look at this indicator, moving average, and let's insert parabolic SAR. Oh, where is my parabolic SAR, man? Always I have a problem in that. I mean, just getting so what's interesting that I'm using that every second parabolic SAR. I'm getting old. It's hard for me already to read my monitor. So what we're talking about is that if it's a downtrend, you have to go for sell. How you can find your stop loss? As I told, your trailing stop. Right now we are trying to find the stop loss or take profit. I told one way is to use these levels, is to use important levels. I will explain that as well. And another way is to use trailing stop. How to use the trailing stop? For example, if you bought here, right? If you sold here, if you are in a sell position here, and you want to find what's your trailing stop. The trailing stop, if I have any, let me check if I have any position here. No, I don't have any position. So and it's the weekend, so the chart are not moving, so I cannot place any order. Let me see if I can put the order. For example, their system market, pending order, buy limits, and the price, buy limits, or in 1.133, 1.133. Sorry, buy stop. So buy stop in 133, for example, right? I'm putting this order. Oh, sorry, market is closed. I forget that read. So if you have any, the thing is that the market is a weekend and the market is closed. I forget that. So if you have any position, for example, if you have any order here, any position here, you can just right click, and in right clicks you will have here in your menu you will have trailing stop. Then you have a trailing stop, and you need to select what's the point of the trailing stop. So the point of trailing stop, as I told, if you're in a sell position here, how you can find your trailing stop, you can do just select the difference between the last two position, the last two changes of your parabolic SAR. You can see here it was 143. 143 can be your point of trailing stop. Or for example, if you are in a sell position here, your trailing stop can be this 222. If you are selling this position, your trailing stop can be the difference between these two changes, 111. So that's how you can do that. I mean, you can use it in any time frame, mostly in 30 minutes, 1 hour. In 15 minutes it doesn't work very good, but in a 30 minutes chart, in 1 hour chart, and 4 hours chart, it works perfect. So that's how you can manage your account. That's how you can manage your trades that you can have it. You can face the trades that to understand what they are and how to manage them. Let me tell. I was telling you about the important levels, right? You can see here, for example, let me delete this parabolic and explain you. So for example, if we are here and we want to understand what's the important levels, right? We can go important levels. You can see here the price. We can see here the level which usually 1, 2, 3, 4, 5, 6, 7 times the price we're trying in this level to understand the next move, right? It can be up or down, or this level. You can see 1, 2, 3, 4, 5, 6, and 7 times, as well as this level. 1, 2, 3, 4, 5, 6, 7. You know, these levels you can understand. I mean, you have to find the your support levels, your resistance levels, as well as these important points. In 1 hour chart, then you can go in 30 minutes chart. In 30 minutes chart also you can see important levels. You can see important levels. You can see important levels, right? Important levels. That's how you can find the important levels. I mean, it's not something special. You can just check the candles behavior and find out. So look, here we find out these levels in 30 minutes chart, right? If you go to 1 hour chart and a little bit back, you can see these levels. Look, these levels, same level. We find out from 30 minutes chart of here. Oh, where did I? Oh, but we found these levels in our 30 minutes charts here. But you can see these levels even if you go back. You can see these levels. They exist in previous movement of the market. So the important levels always they are important in your trade. So if you are in a sell position, for example, if you sold here, make sure that this level can be your stop loss. If you sold here, this level can be your stop loss. If you sold here, this level or maximum, this level can be your stop loss, or a little bit above than this level. You know, that's how you can find your stop loss. And you can find your take profit as well. If you sold here, you know that where can I close the market? Where can I exit the market? So this level could be nice place for take profit. Or if you sold here, in a short time, this level could be placed to take profit and exit the market, and again enter here. You know, these important levels are always important. You can find these levels in your chart and use them as a take profit and stop loss. and make your risk low. I mean, as long as you're in a market, as long as you're taking care of your risk management, it means that you can be in a market for a longer time. And as long as you're in a market, as long as you're in a market, it means that you have more opportunity to gain the profits. Trading is the science. Trading is a business. It's not a gambling. It's not something that can make you wealthy in one night, in one day, and you can be, oh, I'm the millionaire. Don't go about the videos that you can find in a YouTube special that they're telling you, look at this house, look at this car, I made the profit to buy this car in one day, I did that. Don't be fooled. Sorry, I'm so straight in that. Don't be fooled. Don't follow these videos who they are lying you. Be so careful about your trades, be so careful about your positions, and follow the rules. As long as you are following the rule in the market, make sure you are in the right way and you may have the profits, but you are not going to lose your account if you are following the rules. But if you do not follow the rules, you are not gambling. It's not a casino. If you don't want to follow the rules, I'm telling you, better to go to the casino. It's gonna be the much more fun to lose your account. At least in the casino, you can see very beautiful girls, beautiful men, nice drinks, nice foods, and having a fun there, man. And having a fun and losing your money. It's a gambling. But trading is not the gambling. Here, if you want to lose your money, make sure you are not in the right place. If you are here, it's because that you want to make a business. And if you want to make a business, this business, as well as exactly like in other businesses, it has its own rule. And you have to follow the rule. As long as you are following the rules, you are not going to lose your account. And you have a more chance to be in a market, you have a more chance to make the money. But not 100% per day. Be so real and look at the market in very real way. It's the business. And hope you enjoyed this video and it could be useful for you. If you have any other question, there is a contact way. You can contact us by our website, Facebook page, our Telegram channel, or WhatsApp, your email, whatever is fine for you. ZeroSpread and ProSkills, both of them, they are the same company, just the ProSkills is the analysis department of the ZeroSpread. We are in your service anytime, and make sure you're staying always in a safe side and trade safe. All the best, and thank you so much for watching this video.